Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of a building and major grain shortfall in China. But first up, there was another dairy auction which came in marginally weaker, embedding in the prior event's large 5.1% fall. This time it was a 1.7% easing in US dollar terms, marginally less in New Zealand dollar terms. The result, however, was expected and signalled by the futures market. Whole milk powder prices fell 2.2%, skim milk powder prices rose 1.1%. Cheese and butter prices also fell. Volumes sold were normal for this time of season. It is unlikely that this result will change any payout forecasts, but by embedding the recent drop, it won't help. In the US, retail sales rose again last week at the same pace as the previous week, and that's a positive sign, but they're still 2.8% lower than the same period in 2019. And Boeing has announced more layoffs, additional to the earlier very deep cuts. That will mean many Boeing subcontractors will also need to shrink. In China, a new major storm is approaching, adding to their flooding emergency. Hong Kong is currently being lashed. Typhoon Haigas is said to be a once-in-a-century storm system, and the focus is back on the Three Gorges Dam, which has been under relentless pressure from heavy rains. This storm is heading straight for its headwaters. And China is focusing on its food security. An official study shows it's likely to face a grain supply gap of about 130 million tonnes by the end of 2025, and its local supply of three staple grains, that's wheat, rice and corn, is expected to fall well short of demand. They are clearly worried about the strategic risks. They will generate international trade demand at a level that will clearly distort global food prices. And China said it will initiate an anti-dumping investigation into Australian wines. China is the top market for Australian wine exports. The move is widely seen as punishment of Australia for its close links with the USA and comes after similar moves with barley and tourism. It is a ratcheting up of pressure there. China only moves on items that can easily source elsewhere, so it's a one-sided pain. The US Treasury 10-year yield has slipped marginally today, down 1 basis point at 0.67%. The price of gold is back over $2,000, up $23 today to $2,005 an ounce. That's a $60 gain in 2 days. And silver hasn't risen like the yellow metal this time. Overnight, there is oil prices a little change today. They're still just under $43 a barrel in the US, and the international price is just on $45 a barrel. And the Kiwi dollar has risen overnight by more than half a cent, now just on 66 US cents. Against the Australian dollar, we're firmer too at 91.1 Australian cents. And against the euro, we're up marginally to 55.3 euro cents. That means our trade weight index has firmed to 68.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.